Jenny, it's a pleasure to be here with you today. So when we're starting off with 2026, do you think we're going to see the winners continue to win, the losers continue to lose? You have the NASDAQ that gained 20% in 2025, but the Dow just up 13%.
No, I don't think so. I think we're going to see some real shifts, some real broadening, and some real changes in the new year. One of the things that I'm worried about, I mean that not only at the stock level, Courtney, but I mean that at the market level too.
Okay.
And I'll tell you, I'm spooked, and I'll tell you what I'm spooked by. I'm spooked from a behavioral perspective. There was an article in Bloomberg, I don't know if you saw it a day or two ago,
okay.
And this is the headline: every Wall Street analyst now predicts a stock rally in 2026. Never in my 30 plus years in this business have I ever seen pure consensus play out as expected. So that spooks me a lot, that everybody's so on the same path, and you see, oh, what's my best idea for next year? Everyone's best ideas are Microsoft, Amazon, whatever worked. That doesn't sit well with me. And I look at this and I keep hearing people say, well, the economic data is terrific, but the economic data we have is backward looking. And I think people are failing to look forward strongly enough into this new year. There was a guy named Sal Khan on Wednesday morning.
Yep,
did you hear that?
I did.
Yeah, and he was talking about this job apocalypse, and he was talking about how there's like 5 to 6 million drivers in the U.S., and we all know Waymo and driverless is coming. That's really bad. He was talking about like call centers in, where was it, Indonesia or the Philippines, where they're going to lay off 80% of the people. And then even this morning, there was another person on who, I don't know who it was, I was driving, but they were saying that AI is going to enable companies with 1,000 employees to take over things like Accenture, 100 employees to take over SAS. I'm really worried about what the labor market looks like going into this year. And you keep hearing people say, well, labor is still strong, wage growth is still high, but that's backward looking. And so this super rosy outlook, coupled with me seeing that the labor market could be tough and knowing that over 60% of GDP is driven by consumption, like what if people lose their jobs? What if they can't continue to consume at this rate? I get a little bit sketched out. So where I end up for this year is, I think you should take risk off the table. We've had 3 fabulous years. That doesn't mean I'm super bearish. It doesn't mean I think a major bear market's coming. But if you've had a great year, take some risk off the table, whatever form that's going to come to you in. Like maybe you want to take a little bit out and switch strategies and go from super high growth and what's worked into something that's just a better valuation. Maybe you want to put more into international. Maybe you do want to add to fixed income. But I think that the playbook for this year is going to be different than what it was for the year ahead. And everyone seems to just be riding the same old train.
Very interesting. Take a little risk off the table. I mean, Kevin, as Jenny's talking about the job market, Canaccord Annuity is talking about the closing weeks of 2025, giving a gift to 2026, saying we have a solid economy with just enough labor market weakness to ensure ongoing rate cuts. So they're sort of heartened by maybe some of the labor market weakness. What do you make about the setup for 2026 when you're looking at the broader economy and maybe the picture for jobs that Jenny brought up, but also what the world is going to look like as AI technology continues to move forward?
Yeah, I listened to Jenny's comments, and I think they have a lot of value. I'm just not sure that we're there yet. So when you look at consensus, that's the scary part, because I kind of lean into that at the moment. But I think the setup is still what we've seen for 2025, maybe just not with the same level of enthusiasm that we had. The AI trade is still real. It's still growing, even if it's growing more slowly. We will probably see an interest rate cut in 2026, maybe 2, but that's not a rate cutting cycle. And lastly, the economic growth, and I know it's backward looking, has been decent. So the setup for the first part of the year, at least, I think is a continuation of what we've seen in 2025. But what I do like about Jenny's comments and where we're on the same page is that things are not going to be quite as easy. You can't just say AI in an earnings call and expect your stock to move marginally, substantially, incredibly higher. It might not move at all. So I think stock selection will be super important, selectivity, and I think that really lends itself to professional and active management. So I'm excited to be here for 2026. I think it's going to be a great year. And I say that as someone who's anticipating volatility and maybe a slow grind higher.
That's interesting. I mean, Malcolm, too, I think I've heard from a lot of the stock analysts, even if Jenny is saying maybe they're overly bullish for her liking when everybody thinks we're going to move higher from here. And we know we have these elevated valuations, but I'm also hearing a lot of them, to Kevin's point, say, but stock picking is going to be important. You're going to have to be selective. Where do you sit as you're opening up the playbook for your strategy for 2026?
Well, first of all, Courtney, I don't know if today's Jenny's birthday or what, but I'm about to say something nice about her, too, because one of the last times I was on with her, she said something that got my attention, and I didn't really know, I didn't really have any details on how true it was at the moment, but it's a thread I've been pulling ever since. It's been a few weeks. But Jenny was saying something about the fact that it seems as if the individual investor, the retail investor, is running out of capacity to spend, and they're having to sell out of things like Palantir and NVIDIA and anything else that's been going up really well up and to the right for retail investors for the year, just to be able to raise cash to make ends meet. And at the time, I wasn't really too sure how true that was, but what I've been paying attention to is Bitcoin. And because I think that Bitcoin is the barometer on where the retail investors' fear and greed index really is. The VIX is for the institutional investor. Great job there. But I think Bitcoin is a better read on where the individual investor falls. And what we've been looking at since about October, around the time I think the data came through that Jenny was looking at and saying that there's a lot of Bitcoin selling that's been done by long-term holders. So Bloomberg had a piece out a couple weeks ago that I thought was very interesting, where something like $3 billion worth of Bitcoin holdings that are long-term holdings, these are the individual tokens, not the ETFs, have made their way into circulation for the first time. And it was at the fastest pace this has happened in the last 5 years. And so I know from the crypto community, your Bitcoin holdings are usually the last thing that you want to have to sell, especially now in a year where the IRS is actually doing a better job of tracking the cap gains on those things. So I think it's very telling that those types of securities are making their way into circulation. The selling is happening there. And maybe to the point that I think Jenny and Kevin have been making, 2026 probably is not going to be the party up and to the right the way that it was the last 3 years. Probably a good time to be looking at de-risking.
Malcolm, you know what it was? When we were on together, I said it was MicroStrategy that I was looking at. And I'd been watching MicroStrategy since July. Yeah, because I'd seen all that money come out. So it was exactly where you're at now, which is Bitcoin. And to me, I was saying that day, that was the canary in the coal mine that was catching my attention. I'm not actually that worried about NVIDIA. I'm not that worried about Microsoft or Meta. I don't think they're very telling. But I think that MicroStrategy does show where like a huge base of investors are, and that they are feeling the pinch, and that they are running out of dollars. And so when I worry about people losing their jobs more and more in the coming year, I think this is all going to be right in our face. You know, people always ask us, what do you see as the next thing that's going to really derail the market? What's going to cause the next black swan? Well, I always think it's a dumb question, because it wouldn't be a black swan if any of us were looking at it. But I do think that the biggest risk to the market is just staring us straight in the face. And it's this huge concentration, huge correlation, and the risk of, like, all the benefits of AI creating a weak labor market.